this is, I just have to put the start recording button. No? It started?
Yes, sir.
Okay. Everything is on now. I just have to start. So ready? See, your subject taxation is broadly divided into two parts. 50 marks you have got income tax, and for 50 marks you have got GST. I am going to teach you income tax. Okay. GST will be taken by some other faculty. I will be taking income tax, which is of 50 marks. And trust me, if this income tax is thorough, it will really help you in CA final. Whatever I am going to teach you at CA inter level, everything will be useful at CA final. So your target should be make your income tax so thorough that it is useful at CA final level also. Okay. I think the audio is little. Hello. Raju, can you just lower down the volume? Hello. This is fine. Yeah. So we are starting with income tax today, okay? The portion of 50 marks. Now look. See, first my target is to give you introduction about income tax. In introduction, what I will explain, what is income tax, why income tax, and what do you study in income tax. Three things. Listen everything properly. Huh? What is income tax, why income tax, and what do you study in income tax. Three things I will teach you in the introduction, and then we will start with chapter 1. Okay. Now see, firstly, what is income tax? As the name says, it is a tax on income. Whatever income we earn, from that some portion we have to give it to government. Means for example, I earn 10 lakhs, 20 lakhs, 1 crore, whatever. Depending upon the size of my income, certain portion I have to give it to the government. Now the question is why? Why government is asking me to pay the tax? It is my income, it's my hard-earned money. But government says from that some portion you give it to government. Why? Because government gives you facilities in return. We are using roads, flyovers, bridge, railway stations. So all these facilities do not come free of cost. For that government needs to do a lot of spending. And how will government get the money? So government collects from us only. And why will we pay? Because we are using these roads, flyovers, highways, etc. So it is our duty towards the country that whatever income we earn, some portion we give it to the government. Now it depends upon the size of the income. For example, I am a very rich person. I am earning income in crores. So I will have to contribute more. And if I am having very low income, my income is less, I will contribute little less. So depending upon the size of the income, everyone has to contribute. So that is income tax, okay? See, this actually everyone knows, but initially this basic thing you have to keep in mind. Now main point, what a student has to study. See what I have written here on the screen. What to study in this subject. So see, in this subject of income tax you will study how to compute income of any person and how to compute tax. See, look at this. First you have to learn how to compute income of any person, and then you will study how to compute the tax. Okay, as the name says, we are studying income tax. So first we will study how to compute income and how to compute tax. Compute means to calculate. Okay. So now the question is, why to compute income? Why to compute tax? Because as I said, we have to pay some portion of our income to the government. But what is the income amount and what is the percentage of that we have to pay to government? All that we have to study in this subject. So the whole subject is about learning how to compute the income of a person and how to compute the tax. Okay. Now, ask me how to compute the income. Ask, then only I will explain. Okay, so see, now we have asked, you have to listen carefully. Huh? In order to compute the income of any person, we prepare a statement like this. Can you see one statement here? A statement like this is prepared in order to calculate the income of any person. And as you can see in the statement, there is a list of income. Since we are calculating income of a person, so we have to prepare a list of the income. Now tell me, what is the main source of the income? Most of the people in India, what they do? They do job. Okay, people do business also, but there are many people, they don't want the headache of business. They do their simple job and they get a salary. So what is the first main source of income? Income from salary. Okay. See, basically we are adding all the income because I said we have to calculate the income. So first income is income from salary, and then next income is income from house property. House property income is rental income. For example, I have got so many properties and I give the property on rent. So that rental income is income from house property. See, I am not selling the house. See, if I sell the house, there is something else called capital gains, which I will come to. But right now when I am saying house property rental income I am talking about. The next income is income from business. Okay, a businessman's income is what? Net profit. So that is third income. Then comes capital gains. What is capital gains? Gains means profit. And this is profit on the sale of an asset. Like you sell land, jewelry, gold, silver, etc., shares, debentures, bonds. Whenever you sell some property, some asset, the profit which you make is called capital gains. But you have to sell a property or an asset. Any asset it can be. So it creates capital gains. Even that is an income. That is not a regular income, but once in a while sometimes we sell the asset. So you make a profit, that is capital gains. And then income from other source. What is this? Ifos? This is a common short form. I will be saying Ifos. So when I say Ifos, it is income from other sources. And as it says income from other sources. Other means others. Other than first 5 types of income which I said, all other incomes are called income from other sources. See, actually there are 1,000 ways of earning the income. But what government has done, the main income sources they have listed first. And rest all income they are saying they are income from other sources. Then all these incomes are added. After that, what the total which you get is called gross total income, and then there is something called deduction under chapter 6A. See, what is this written? Under chapter 6A. See, what is chapter 6A? I will come to that later. Right now I am just giving the brief overview. So there is something called deduction, and one deduction is deduction under chapter 6A, and then deduction under section 10AA. What is this? We'll study, but something like this we minus. And then what you get is called net taxable income. And on this certain percentage you have to calculate, and that amount you have to pay to the government. And once you are able to calculate this tax amount, you can say, I know income tax. Now looking at this, you might feel, what is so big in this? But you know, it is not that simple that we have to simply add these 5 types of income. For each income, we have to do a separate working. Like, see, what is the first income? Income from salary. Now, in order to calculate this salary income, we have to prepare a separate statement. Like, this is a statement, but this is the main statement. But to support this, you will prepare 5 more statements. Why 5? There are 5 incomes: salary, house property, business, capital gains, income from other source. We call these are 5 heads of income. See, this heads is not my word. Law says heads. Say heads. Yes. Heads means categories, 5 types of income. So whenever you say what are the 5 heads of income, so these are the 5 heads. And if someone say what is the last head of income? Income from other sources. Okay. Today when your parents will ask you, today you studied income tax, okay, tell me what are the 5 heads of income? So you should be able to say income from salary, income from house property, income from business, capital gains, income from other sources. And to calculate these 5 heads, we prepare 5 separate statements. See, I have shown here, look at this. Can you see these 5 small boxes? These are not just box, big statements. But I have shown a mini version of that. These way 5 statements are to be prepared. And can you see this at the end, some totaling I have done? See this total? These totals will gather here together. And the grand total will be called as gross total income. But now the next question is how to prepare these statements. So for these 5 statements, we have got 5 chapters to study. See, slowly your index is developed. You know, in every subject there is an index at the first page. So in your index, can you imagine what is the first chapter? Income from salary. Then comes income from house property, business, capital gains, income from other sources. 5 chapters will study. But ultimate result of that will be, you will be able to prepare these 5 statements. And then ultimately the total is gross total income. Then after one more chapter will be taught. There will be a special topic on deduction under chapter 6A. And then one small topic on deduction under section 10 AA. And then one more topic to teach you about the tax rates. Can you see here? At the end, after the net taxable income is arrived, we have to calculate the tax. See, on the screen it is not visible, but look at the thing what I am highlighting. On this amount you have to calculate tax at the rate of some percentage. Okay, I hope now you can see. Okay, so how to calculate tax, that itself is a topic. So in this only you can see so many chapters you have to study. So that's it, I'll start one by one. From all this I will start one by one each topic, and once everything is over you can say substantially income tax is done, substantially. There are some sundry topics also like residential status, TDS, clubbing, set off. I am not expecting you to know all this. I am just naming, just to know that apart from this there are some sundry topics also. That we'll study later. But once you know this, the major chunk of income tax is done. Okay. Now, as I said, these are 5 heads of income, and for each income we have to prepare a statement. Now to prepare a statement there are certain rules. You will be learning the rules from me. But who makes the rules for preparing the statement? Government. And these rules are written in Income Tax Act 1961, Income Tax Rules 1962. There are 2 fat books. One book is called Income Tax Act 1961, other is called Income Tax Rules 1962. Okay, this is like our Bible. We people, chartered accountants, for them it is like a God. Okay, because that is the source of our income in future once you become a CA. So these are 2 books. And you know why 2 books? Law is only one, income tax law. But why 2 books? Because you know what government has done, this book of Income Tax Act, you know, this contains the main provisions. But sometimes, you know, there are some things for which government wants to make more and more rules, more and more rules. So wherever they feel like putting more and more rules, they put it separately in a different book, Income Tax Rules 1962. Because see, if they put everything in one book, the book will become very fat. Already people complain, our Indian law is so complicated, it will become worse than complicated then. That's why to keep the law concise, what they have done, all the main rules they have written in Income Tax Act. But wherever they feel like keeping more and more rules, then extra things they put it in Income Tax Rules 1962. Okay. So you are going to study this law. Okay. Obviously we are not going to study the bare act. I will simplify everything in my own language and give it to you like a ready-made thing. But our source of knowledge is this. Now, can you see the Income Tax Act is 1961. Now the act was passed in 1961. So what does it mean? Before that there was no income tax. 1961 is a year when law was made. That means before that people didn't used to pay income tax. They used to pay. But there was a different law. Income Tax Act 1922. 1922. That law was abolished. And a new law came 1961. Now Nirmala Sitharaman is talking about even abolishing things and putting a new law totally in place. Because see, one law after a particular number of years, you know, it becomes little outdated. It needs to be revamped. So they are talking about this, that they will revamp the whole income tax law. But revamp means it will not be like everything will change. But major changes will come. Okay. But anyways, that they are planning. It has not yet been confirmed. They are planning in the next budget. But by that time we will clear our CA inter. Okay. Be positive. So anyways, the point is, right now we are studying the act which was made in 1961. But then 1961 is a very old year. Even I was not born that time. So 1961 law, that law doesn't remain constant. This law keeps changing. Every year there is a budget. There are some new changes coming. Changes means it doesn't become totally different, but some changes keep coming. Okay, so we have to study the rule for which year. Every year the law keeps changing. So the question is, as a student of CA Inter, we have to study the rule for which year. See, you cannot be expected from ICAI that you should have the knowledge of all years. Even I don't have knowledge. I cleared my CA in 1997. What I studied in my time, I don't remember, because I am into the latest law. Obviously, every year the law changes. I will also forget what I studied in my time in 1997. So every year the rule changes, and you are not expected to have the knowledge of all years. So you are expected to have the knowledge of 1 year. And you know what is your year? Financial year 24-25. You have to stick to that year. Whatever rules I am going to teach you, it is applicable for financial year. Did you notice financial year? We never talk calendar year in income tax. Income tax is always April to March. See, calendar year is Jan to December. But I didn't say calendar, it is financial year. So it is April to March. And precisely which April to March? 24-25. 1st April 24 to 31st March 25. That is our fixed year. On that year, they will base the question. Every question in your paper will be based on financial year 24-25. See, look at this. Look at this. Can you see here? 1st April 24 to 31st March 25. For this year, whatever rule government has made, that you are supposed to study. Now see, in income tax, there are 2 years involved. In 1 year, you generate the income. And in the next year, you pay the tax. Because see, income tax is not a daily or monthly process. It's a yearly process. So what law says? That for 1 year, you have to simply earn the income. Can you see this? This year I have written as year of income. And once we earn the income, after 31st March comes, you need to calculate and pay the tax. And that you have to do in the immediate next year. So there are 2 years involved. In 1 year, you generate the income. Next year, you pay the tax. Okay. And the year in which you pay the tax is called assessment year. What is it called? Assessment year. Can you see I have written here, look? The year in which you pay tax is called assessment year. You know why do we call assessment? What is the meaning of assessment? To assess means to calculate and to check. So what calculation and what checking? Calculate means I need to calculate the income which I earned in the last year. Because only if I calculate, then only I can decide the tax. So since in this year, calculation is happening, that is why we say assessment. Assessment means calculation. And after we calculate and pay the tax, government does the checking. And checking is also a meaning from assessment. Okay. So assessment has got 2 meanings involved, calculation and checking. So calculation we will do, we will pay the tax, and then government will do the checking. But all that happens in the next year. But the year in which you earn the income, that was the last year. That's why see, we call this year as the previous year. Because see, whenever I pay tax, do I pay tax of that same year or the previous year? Previous year. So that's why government calls the year of income as the previous year. See, take this previous year word in a very technical sense. Huh? Don't think it is just a casual English. See, previous word is a general word, but this is the word used by the law. Income tax department keeps saying previous year 1920, previous year 23-24, previous year 22-23. They call every year as a previous year. Why they call every year as a previous year? Because whatever tax government is getting, it is for that year or the previous year. Previous year. And as a student, you know what you should think. The moment we hear previous year means it is the year in which your income was generated. And the moment you hear assessment year means it is the year in which you are going to pay the tax. And our previous year and assessment year is defined in the exam. Students who are appearing in May 25, for that matter September 25 or Jan 26. For all these attempts the year will be same. So God forbid, in case you do not, I should not say this, but then if someone do not clear in May 25, September 25 the rules will be same. Jan 26 also rules will be the same. Okay. Now how do I know all this? That for May, September, Jan the rules will be same. See. Yeah. See, there is a technique. Look here. Look. When are you giving the exam? May 25. In fact, you will pass in May 25. I will pray for that. Okay. But praying will not work. Hard work will work. So May 25 is your attempt. So search in this timeline. Where is May 25? See, this is March. So can you see your exam here, May 25? And when the student appears for the exam, that is the assessment year. Year of exam is the assessment year. So May 25 falls in this financial year. And a student always gives the exam in the assessment year. Why? Because in the exam you have to calculate the income. And obviously, if you are giving the exam in May 25, you are not going to calculate the income of 25-26. You will calculate for the previous year. Okay. Now tell me, in case a student appears in September 25, even September 25 falls in the same financial year. Then Jan 26 also falls in the same financial year. But after March 26, next attempt comes in May 26. So for a student of May 26, the rules will change. Okay. Then the year will change. Okay. So this is the way we have to decide. Because see, I find it very funny. Many students, they have not cleared 2-3 attempts. They have a question to me, sir, for my exam, which year will be applicable? This question should not come. You ask yourself, when are you appearing? Whenever you appear, that is assessment year. And the year before that is the previous year. Okay. So see, in every question, what they will ask? Calculate the income of Mr. XYZ for previous year 24-25. This is the way they ask in the question. Calculate the income for previous year. First they will write previous year. And which year? 24-25. Or sometimes they write like this also. Calculate the income for assessment year 25-26. See, if they write the word assessment year in the question paper, they will have to write 25-26. If they write previous year, they will write 24-25. But one thing is sure, this will be the fixed year. See, this I have to tell at the beginning of the subject. You know why? Because in accounts, we find any random year. 2016, 2012. Because accounts is same for all year. Income tax changes, so we are specific to the year. So this is over. So that's it. This completes your introduction. Wait. Some mistake. Wait. So this completes your introduction of income tax. So introduction, I explained this thing. Then look at the slides. Then I gave the synopsis of how to compute the income. And then our law. And then the concept of previous year and the assessment year. Okay. Now, first chapter will start now. Now from this overview of the whole subject, tell me, it looks like which topic I am going to start now. Yes, obviously a student will think that sir will now start income from salary, but no. The best topic to start with is income from other sources. I know you will find it little weird, but trust my experience. More than 27 years has happened. Since 1990, I have not even tried doing job here and there. From my childhood only I am teaching. In fact, while I was doing CA, that time also teaching. So, since so many years of teaching, obviously I have seen everything in the world. So, trust my experience, income from other sources is the best topic to start with. You know why I have to convince students? Because a general layman will think, income from other source, sir, I started with it. How funny. Trust my experience. Soon, time and again, I will prove that why did I start with income from other source? That time you will say salute. That was the best topic to start with. Because of that, top subject is going very smoothly. Basically what happens, these topics, especially when income from business comes, you require knowledge of income from other sources. Now suddenly I am involved in business income topic and items of income from other sources come, you will not get the clarity. You will get the confusion. So although income from other source, it is not that important or a big topic, small topic, but the best topic to start income tax subject. Okay. So our first chapter will be income from other source. and then I will take income from salary. And after that also, I will keep other heads pending. I will directly go to chapter 6A and then I will explain tax calculation. This sequence is tried, tested and trusted. It's not being experimented on you. So just follow what I'm saying, okay? So first topic to start with is income from other sources. So see, we are starting income from other sources. Okay. Now, income from other sources. What is income from other source? As I told you, look, if some income is not income from salary, if it is not income from house property, if it is not income from business, if it is not capital gains, then it is income from other sources. See what I've written, all the remaining incomes other than the first 4 heads of income are called income from other sources. Okay. Now, in this chapter, what you will study, they will give a question. In that, they will give you some variety of incomes, all not falling in these 5 heads. Means obviously this remaining incomes they will give in the question, and then you will have to prepare a statement. So now you know what you have to study, that in this chapter which type of incomes we will come across. See, I said income from others, but which type of incomes? Can you name few? Like dividend income? So this way, actually you can imagine any income. Imagine any income if it doesn't fall in the first 4 heads. Speak properly. First 4 heads. If it doesn't fall in the first 4 heads, that means it is income from other sources. So see, for this, I have made one keyword. You will find it a little funny. See one keyword. Trust me, this keyword will complete the whole topic. How do I read this keyword? D.W. Ramu, Fakir, G, etc. It is funny, but one day you will feel in that D.W. Ramu, Fakir, G, sir has covered the whole topic. Whole topic, okay. So just accept this keyword, respect it. D.W. Ramu, Fakir, G, etc. What is this? This is a list of the incomes which fall under income from other source. Now see, when I will tell you the full forms, so I am not just going to tell you the name of the income. See, name of the income you will also have heard of. You heard of the name of the incomes. I will have to teach you that these incomes are taxable or not. In income tax, what you have to study? Whether income is taxable or exempt. Exempt means on which you don't have to pay tax. When law says this income is exempt, exempt means free from tax. We will not tax you. So it is exempt. But some incomes are taxable. That is what you have to study. Look here, I have written, look. It's not seen. Wherever it's not seen, I will show you. Look. Can you see now? Taxable or exempt. Means for each income you have to study taxable, exempt, taxable, exempt. This is the language of taxation. Tell me, what is the language of accounts? Debit, credit, debit, credit, debit, credit. What is the language of maths? Plus, minus, multiply, divide, plus, minus, multiply, divide. That is maths language. And what is tax language? Taxable or exempt, taxable or exempt. So whenever I come in the class, I will come with some income and then I will explain you taxable or exempt. And see, most of the incomes are taxable. Income is meant to be taxed. But few incomes are exempt. But which few incomes are exempt, which you need to memorize. And there you have to understand the logic also. Don't by heart anything like a rule. This is a rule, we have to by heart it. If I tell you this income is exempt, you should have the reason, sir, why. Income should be taxed. So although we like it is exempt, exempt we like it or not? Exempt means you don't have to pay the tax. No one likes to pay the tax. We like it. But then you should have a question, sir, why exempt? If you have the tendency of studying with why, you will start loving the subject. And I will make sure, it's my guarantee, you will love this subject. And how can I confidently give the guarantee? Because I am sure my method of teaching is everywhere I will explain the logic, that why it is. See, the moment you simply by heart, without understanding why it is happening, simply by heart, mug up, you hate the subject. Mugging up you can do for 1 or 2 lectures. But if it happens every time in every topic, then you start hating the subject. And that will never happen. Okay. So, in short, in the list of D.W. Ramu Fakir, One by one I will explain which income is taxable, which income is exempt, and if exempt, why exempt. Okay, so starting with the first alphabet. What is the first alphabet? D. D for dividend income. D for dividend income. Now dividend income, how do you get dividend income? When you invest in shares. You invest in shares, you get returns from the company in the form of dividend. Okay, why it is called dividend? Because company, whatever profits they earn, they divide it. And to divide gives you the word dividend. We don't pronounce dividend. We call it as dividend, but the word has come from the divide. Company is dividing the profits to the shareholders. So everyone who gets the share is called dividend. So now the question is whether this income is taxable or exempt. It is taxable. It is taxable. But you know, here you will find one weird thing. Dividend company is giving out of profits. And on profits, company is already paying tax. And the same profit when distributed to the shareholder, they have to pay the tax again. So this is a typical case of double taxation in India. It is in India only. If you go out of India, you will find dividend income is never taxed by foreign governments. Because dividend is what? Distribution of company's profits, and companies already paying tax, and company's profits are income from business. You know, today I told you 5 heads of income. In that, company's profits is income from business. So company is already paying tax. On that, shareholder has to pay the tax again. So it is a typical case of double taxation. But can't help. Some things are weird, but we have to accept it. And you know what is the thinking of government behind this? That there is a vast distance between the company and the shareholders. Although we call shareholders are the owner, but shareholder doesn't know what's happening in the company. There is a vast distance. So although company has paid the tax, shareholder will have to pay it separately again. Like see, I might call, I have got shares of Reliance. Actually, I have got few shares only. So I can say I am the owner of Reliance. Shareholders are the owner, but I don't even know where is Reliance, where is the office. Although I am from Mumbai, but I don't know where in Mumbai Reliance office is there. I don't know, but I am saying I am owner. So this shows what you know, there is a vast distance between company and its owners. So although company has paid the tax, shareholder has to pay the tax again. Anyways, it is a debatable matter. People might say no, it should not be taxed, but forget it. We are as a student not here to debate, we are here to learn it. So learn dividend income is taxable. Then next income is winnings. Can you see W? W stands for winnings, lottery winnings, winnings from horse race, nowadays online games. People have got nothing to do but they just download some app and they keep playing the game in the mobile. So there also some winnings comes. So any types of winnings, it is income from other sources. But you know, as a student you should check, just because sir is saying income from other source, it's not income from other source, you should check it. You know what you should check? Check here. Does winnings fall here? Does it come from salary? Is it in job you get? No. Is it rental income? No. Business? No. Capital gains means you have to sell the asset. So winnings doesn't fit anywhere. See, in short, you also check. I know I am going to teach you right only. But as a student, you should convince, yes, dividend and winnings, the sir has taught 2 points. They are not falling in the first 4 heads of income. Say heads of income. Okay. So that's why they are rightly placed in income from other source. Now, even winnings is taxable. Why it should be exempt? You are actually getting the winnings in free without any hard work and effort. On mobile, I was playing a game, I won 15 lakhs. People win, Everyone do not, but people win. So there is no hard work, no effort. It is a free income. Pay the tax. It will be taxable. See, I will continue this theory ahead. Before that, I want to show what they will ask in the question. Because ultimately, you have to solve sums. So if you are mentally prepared that what they are going to ask in the question, what you have to prepare in the answer, then you can learn the theory with, with full attachment. Okay, yes, this theory will help me, this theory will help me. Because you know what is the target of the question. So see, in question, what they will do? See, I have just completed D and W. In between, I am just shifting to this, what is asked in the question. So tell me in the question what they will give you. They will give you a list of incomes. And trust me, whatever list they give, it will be from D, W, Ramu, Fakir, G. Only these incomes will come. Based on experience I have seen. Actually speaking, there can be many incomes in the world, but I have written etc. But mostly in the exams you will see only these incomes appear in the question. So you will be given a list of income, then in the answer what you will prepare? A statement of income from other sources. And then what you will do? For each income given in the question you will decide whether it is taxable or exempt. See, look here, I have decided. Few incomes will be taxable, few incomes will be exempt. See, this I have randomly written a T, exempt. So let's assume first two incomes in the question are taxable. Third income is exempt, then taxable. So this you will have to identify based on the knowledge which I am giving. And then in the answer what you will do, look, literally you will have to copy this income and paste here. Copy paste, literally copy paste. See, you want to see how I have done copy paste? Look, copy paste, but only the income names you have to copy paste. Regarding amounts you have to be careful. Don't just copy all the amounts in the statement. For you are not getting marks for simply copying. For amounts, you know what you will do? The incomes which are taxable, you will write the amount. Incomes which are exempt, you will put dash. Okay, so see what I have done here. Taxable income, write the amounts. Exempt income, put a dash. Taxable income, write the amounts. Exempt income, put a dash. So in my example, first two incomes were taxable, so I written the amount. Same amount which is given in the question you have to copy. And those which are exempt you have to put a dash. This way you will have to then total up. And the final total is called what? Taxable Ifos. And then this way your sum will end up. In this chapter you have to do this much only. This is the beginning, right? But then what to do with this? See, our sum ends here. But what to do with this? So see, after this what should you come to your mind? This figure will be transferred here. Okay? And then along with this income there are brothers of this income. Other brothers are salary, house property, business, capital gains. All that will be totaled up and the grand total is called gross total. Then deduction, etc., etc. In short, every time whatever we are studying, trying to connect with our main goal. Okay, our main goal is to prepare this statement, and for this amount we calculated by preparing this statement. Okay, so tell me, dividend and winnings we did. So this, if it comes in the question, what you will do? You will put dash or you put an amount? Amount, because they are taxable. Then next alphabet is R. R stands for rent income. And can you see there are three R's? All three are rent income. But then listening to the rent income you will feel, but sir, rent income is in income from house property. But that is house property rent. House is not the only thing which gives you rent. You can get rent from camera, you can get rent from plant and machinery, you can get rent from furniture. So anything other than house, if it is giving you rent, it goes to income from other sources. Feel the word other. Other sources means other than the first four heads. So rent of house, it is income from house property. Rent of other asset, it is income from other source. Now main question is taxable or exempt. See, whenever I speak about some income, back of the mind, what should go on? This income I know. Tell me it's taxable or exempt. You should be desperate to learn taxable or exempt. It's taxable. Why exempt? There is no reason to exempt it. You are getting rent from renting the machinery, furniture, etc. Pay the tax. It will be taxable. But see, this was R1, rent of other assets. Rent of other assets. Okay. Then there is another R, rent from subletting. Wait, before that one, what did I say? What was R1? Rent from other asset. Other means other than house property. Now what is the meaning of house property? Any structure of four walls and a roof. See, sometimes in the question they give rent of a factory. So students get confused. Factory? See, whether it is factory, godown, showroom or a classroom, any structure of four walls and a roof, it is house. See, house is a place where you can take shelter. So it can be a godown also, it can be a warehouse also. So any structure of four walls and a roof, it is called house. So house doesn't literally mean the place where we stay at home. Take it in a broader sense, okay? So tell me if in the question they say rent from giving the shop on a rent, shop is given rent. So shop is a four-wall roof, it is house property. But other than four-wall roof structure, other than four walls in a roof type structure, they are called income from other sources. So I wanted to clarify that. It was R1 only. Yeah? Second R is subletting. Rent from subletting. Okay, now see, I'll do one thing. Before I explain that, I will keep showing the theory also. Look here. You know what I've done? This whole theory which I'm teaching in D.W. Ramu Fakirji, I have expressed in the form of a statement. You know why I expressed in the form of a statement? Because I know eventually my students have to prepare in the answer a statement only. So while you are studying the theory only, imagine as if you are solving a sum. Like imagine you are solving a sum and there is dividend income. So what will you do? What will you do? You will put the amount. See, particulars column, you just have to copy from the question. Focus on the amount column. You will put the amount. Then imagine you are solving the question. In the question you find winnings. You will put the amount. Then imagine you are following the question. You are coming across rent income. In that, if rent is of other asset, you will put the amount. Now what was the next rent asset? Subletting. You know what is subletting? Rented property given further on rent. It is house only. It is four wall and a roof. But it is not my own house. It's a rented house. You know, this head is attracted when you are the owner. Like imagine this classroom where you are sitting, imagine I am the owner. And as an owner, if I give it on rent, then only income from house property. See, for income from house property, there are two conditions. Condition one, it should be a four wall and a roof type structure. Second condition, you should be owner. See, only if I am owner, then I can say income from house. I can proudly say house. But that word I can proudly use when I am the owner. But imagine this place I have taken on rent. So I don't have the pride of ownership. Huh? I have taken on rent. But due to some reason I am not using it. So I have further rented to some other person. That is subletting. That comes in income from other sources. See, I have written here. I'll show you the drawing. Look. Subletting. Can you see the drawing? X says let out the property to Y. You understand the word let out? To let out means to give on rent. I will be using this word frequently, let out. Let out means to let anyone use. Let out. So that is giving on rent only. So see what did I say? X says let out his property to Y. And X is the owner. And when owner is earning the income, it's income from house property. And see here I put cross, you know why? Wait a moment. See here I have put cross because in this chapter this will not come. Okay. Because when owner giving the house on rent, that goes to income from house property. So here this transaction has got no role to play. But now what Y did? Same rented property further rented to Z. So this is called subletting. And here I have put a tick mark, means this will come in our chapter. And even this is taxable. Don't forget the bottom line is you have to learn it is taxable or exempt. It is taxable. Okay. See, you are noticing that all the incomes are coming to taxable only. See, most of the incomes are taxable only. Then you will think that what is the point of studying all this? See, you have to become familiar also, no? In the question, suddenly some random income comes which you never heard of. You will be confused for a moment. And once you have heard about this income, you know, you will feel like it's heard of. So once and come in the question, you will confidently say, yes, sir has taught this, it is taxable. Then there is one more rent. There are three rents. Huh? Second was subletting. Then third rent is composite rent. What did I say? Composite rent. Composite means combined rent of building plus other assets. You know, actually building means four walls and a roof. That comes under income from house property. But see, if building alone is given on rent, building alone, then it is income from house property. But imagine a building, inside there is machinery installed, computers, furniture, air conditioner, everything is installed. and the whole property I have given on rent together. So there are multiple assets being rented. So it is composite rent. Composite means combined. In my example, what was the combination? Building, machines, furniture, computer, air conditions, everything is combined let out. And then, in real life what happens? People make one single agreement. When you rent out the property, you make an agreement. So in the agreement, they don't do the bifurcation. That this much rent is of building, this much rent is of machine, this is of furniture. They don't do the bifurcation. They charge a lump sum amount. Take this whole property, give me 1 lakh per month. So you don't know the breakup. So, but your heart feels, what? There is 4 walls and a roof, which should go to ideally income from house property. But I don't have the breakup. Because along with that 4 walls and a roof, there is machine, furniture inside, and I don't have the breakup. So in such helpless situation, you put everything in income from other sources. If you are not able to split, they rent. See, if possible to split, then what to do? You should split the component of building, 4 walls and a roof, and that should ideally go to income from house property. That should ideally go to income from house property. But if you are not able to split, then put the whole thing in income from other sources. Because see, if such cocktail things, you put it in income from house property. If you put such cocktail means mixture, if you put such cocktail things in income from house property, it is insult of house property. What will house property say? I don't have any respect or what? I consider only 4 walls and a roof. What is the machine, furniture? So that's why we cannot put the cocktail rent in income from house property. So it will go to income from other sources. But this is if the rent is not separable. Huh? If it is separable, then the rents of respective asset will go in respective heads. Okay. But see, in the question you will check the, no? But trust me, most of the question they don't give the breakup. They give a mixed rent. It includes building, furniture, machinery, everything. They don't give the breakup. Then put everything in income from other sources. So see here, I have written here composite rent of building plus other asset. See why building is written separately? Because building is 4 walls and a roof. And other assets are items of income from other source. But since breakup is not there, everything comes in income from other sources. I hope you can see this. Building plus other assets. Okay. So just remember like this: rent, rent, rent. Taxable, taxable, taxable. Other assets, subletting, composite. Other assets, subletting, composite. See, while I am teaching, try to memorize. Understanding is not a big deal. For that I am putting my efforts. I am making the notes, everything. So if you understand something, you are not done a great job. When you remember everything, hats off to you. Okay. So try to memorize, along with that teach in the lecture. Now see, in Ramu, next alphabet is A for agriculture income. This is exempt because we give importance to agriculture, farming activities, because agriculture is the source of our livelihood. We eat food that comes from agriculture only. And government of India gives importance to agriculture. That's why the people who do farming, farmers, their income is completely exempt from tax. Okay. But if the agriculture income is in India, if you do farming activities in China, Japan, then it will be taxable. See, for example, I am from India, but I have a farm in China. I do agriculture in China. Then also, government will tax me in India. I cannot say my agriculture is happening in China. Why are you interested in tax? Government will say you are staying in India only, na? To hell with your farming in China or London or Dubai. When you stay in India, it is your duty to pay tax to India. And this is taxable also, because I am doing agriculture in China. Yes, if I do agriculture in India only, then my income is exempt. Tell me, who says it is exempt? To you, I told you. But it is written in the law, and in the law it is written in some section. There is one section 10(1). This section says agriculture income is exempt. 10(1). 10(1). Do you have to remember the section also? See, we are studying Act. Act has got sections. So this is section 10(1). So look at this, I have written here, read. agriculture income, if it is in India, exam under section 10(1), are you noticing dash? Means if it comes, see, imagine as if I am solving a sum only, no? A big sum in which D, W, Ramu, Fakirji, everything is given. Only thing is, in the real sum, we will have real amounts. Here I am putting artificially cross, cross, cross. But feel as if you are solving the sum. So that you know, by the time we actually solve the sum, you will find it very simple. So agriculture income I put dash because it is exam. Under section 10(1), that you have to write in the bracket. Huh? But if it is in foreign country, it will be taxable. What if the problem is silent? Then assume it is in India. We are Indian. So problem is silent, we will assume it is in India and you will put a dash, exam under section 10(1). So this is A. Ramu A. Next alphabet is M. MPs and MLAs. Member of Parliament, Member of Legislative Assembly, these people get salary. And their salary is also taxable under the head income from other sources. You will find it little weird right now. You heard what I said? Members of Parliament and Members of Legislative Assembly, we call them MPs and MLA. They get salary, a fixed monthly salary. But that comes to income from other sources. So what is weird? It is salary, it should come under the head income from salary. See, for each income we prepare separate statement. See, in accounts what we do, we put everything in one profit and loss account. But taxation is classifying 5 heads of income. So this income you should feel it should go to income from salary. So see, it should come here. But I am saying no, it is income from other source. You know what is the reason? Look, an income is called salary only if there is a master and servant relationship. There should be a relationship of master and servant. You should have some boss and you should become a servant. He will dictate you and you will work as per his directions. We call it as an employer-employee relationship. Your boss is your employer and you are the employee. You are like a servant. Only if that relationship exists, it is income from salary. But you know, MPs and MLAs, they are not employees. You know, students think, no sir, they are employees of government. No. If they are employees of government, then who is government? They themselves form the government. Tell me, Prime Minister Narendra Modi, Chief Ministers, MPs, MLAs, all standing together, what people will say? That is government. So MPs are part of government. They themselves form the government. They are not under the government. See, when you call salary, when you are under someone, you have a boss, you are working under him, you become his employee. But here they themselves form the government. Okay. So whenever you imagine ministers, MPs, MLAs standing together, that whole group is government. So MPs and MLAs, they themselves are government. They are not employees of government. So now you will ask then why salary? Because see, although they form government, but they also have their wife and children. They also want to live and eat something for their livelihood. So what they do? Whatever collection government gets, some portion they take away. Some portion they say. So whatever collection government gets, from that what they do, something ministers will take, some prime minister will take, some things MPs will take, some things MLAs will take. It's like they will take some portion, but that is not salary. It's like, you know, in partnership firm also what happens? Partners get salary, but their salary is also not income from salary. Because partners are not the employees. Partners are the owner. Why do you call partner? Part owner. Part owner, part owner, part owner, partner. Part owner. Partner is a part owner. So see, 2 salaries you will find in the whole law, which listening to it you will feel it is salary. But don't get misguided. These 2 salaries are never salary income. Which 2? Salary received by a partner in a partnership firm and MPs, MLAs. See, in partnership firm also what happens? We 3 people do business together and we take money, some partner will take some amount, some partner will take some other amount. So their salary is also not income from salary. See, these are 2 exceptions. Actually see, salary of partner is the not right place to discuss right now. Huh? Because partner's salary goes to income from business. Because partner is the owner of a firm which is carrying on a business. So imagine if I'm a partner here, for example in this coaching I am a partner. So the whatever income I get, it is from my business only. See, partner salary actually I should talk about in business income only, but why I'm talking right now, I wanted to give you two exceptions. Understand my feeling? I wanted to say there are two salaries in this world, which when you hear you feel it is salary, but they are not income from salary. It is MP's, MLA's income from other sources. Partner's salary will be income from business. Okay, and rest all salaries, people who do work like slaves, their salary is income from salary. Okay. Anyways, right now I am not discussing partner salary here. In our Ramu, can you see Mu M? That is MP's, MLA's salary. Look here. Now see, in MP, MLA, there is one more point. These people receive daily allowance for their day-to-day expenses of attending the meetings in the parliament. See, if I am a member of parliament or MLA, I will have to regularly attend the meetings for government. So I have to travel long way. So I have some petrol expenses, etc. So for their day-to-day expenses, they are given daily allowance. That is tax-free, exempt. Why? Because law feels that daily allowance, they are not enjoying the money. That is actually spent in their day-to-day expenses on attending meetings in the parliament, etc. So since they are not able to enjoy that income, no tax. Okay. But the salary which they get, they fully enjoy with their family. That will be taxable. But the daily allowance is officially spent in the day-to-day expense of attending parliament meetings. That's why it is free from tax. And the moment I say exempt, you should ask me the section. Ask. Section, okay. And don't ask, you should imply now it will be always 10. You are lucky that all the exemptions are under section 10. But in the bracket something will be different. It is 1017. 1017. Look at this, 1017. What was 10-1? Agriculture income. This is 10-17. See, these small tens are worth remembering. All other incomes, it is just an information for you. They are taxable. And for taxable, we don't have to do anything great. We have to simply copy the amount in the outer column. But daily allowance, you have to be alert. The moment it comes in the question, they will give the amount. But you don't write the amount. You put a dash. And in bracket, you have to explain. You have to show off your knowledge in the exam. It is exempt under section 1017. All exempt incomes, main section is 10. The bracket will change. Then in Ramu, the next alphabet is again M. No. There are two M's. Look at the keyword. So first was MPMLA. That was one only, MPMLA point. Second is income of a minor children. Income of a minor child. You know, minor child's income, child doesn't pay the tax. Mummy or papa will pay the tax. Either father or mother, whosever income is higher. Like see, I have two children. My elder son has become 19 years old. My younger daughter, she is 16 years only. So minor means what? Below 18. Minor is below 18. So my 16-year-old daughter is a minor child. So if she has some income, like dividend, means maybe I have made some investment in her name, she is receiving dividends, she is receiving some interest income. So whatever income comes in her name, on that who will pay tax? Either me or wife, whosever income is higher. So let's assume I am earning less, my wife is earning more. So wife will have to pay the tax and vice versa, whosever income is higher. So minor's income is taxable in the hands of. Notice the language, you have to be well versed with the income tax language. See what I am saying? Minor's income is taxable in the hands of either father or mother, whosever income is higher. Now you should have a doubt, sir, why? It is minor's income. Why mom and dad will pay the tax? So see, don't think you understood the logic. The real reason for this, I will not be able to explain today. Unless I teach you one topic called clubbing of income. There is one topic called clubbing of income in your syllabus, unless I reach at that topic, I will not be explaining the real logic. And if I try to struggle and explain the logic today, it will be too early for you to digest. Because it also requires the knowledge of tax rates. Have I explained you some tax rates percentage? No. So these things, since I have not taught you, I will not explain the logic of why minors income parents are paying the tax. But this reason is pending. I will explain, trust me, at the right point of time. Till that time, just add as a rule that whatever income minor is earning, he or she will not pay the tax. Who will pay? Father or mother, whosever income is higher. And the one who pays the tax will get exemption of 1,500. Exemption of 1,500 per child. Like if my minor daughter, she has income of 10,000. So 10,000 minus 1,500. Only balance will be taxable in my hands. Assume my income is higher compared to my wife. So when I prepare my statement of income from other source, I will put my daughter's income in my statement. But how much? My daughter's income is actually 10,000, but 1,500 exempt. 1,500 is a fixed amount. You will have to buy heart 1,500, 1,500, 1,500, 1,500, 1,500 per child. So this way I have got 6 children. I don't have a. Assume I have got 6 small children, all minor, all below 18. So for each child, 1,500, 1,500, 1,500 exempt. That much exemption will be given. Again, you should have a doubt. Why 1,500 exemption? What is the logic of this? I told you this thing is such that I cannot explain the logic now. Unless you have the knowledge of tax rates and clubbing, it will be too early to start. And if I get emotional, no, I want to explain to a student that everything will be dragged. It will become hodgepodge. Okay. So, why 1,500 amount is kept and why parents are paying the tax? All that I will explain later. Right now, just remember, when parent pays the tax, he will not pay the tax on the entire income. 1,500 per child will be exempt. And the moment I say exempt, section 10 in bracket 32. 1032. 1032. Look, 1032. By heart, 1032. 1032. By heart, 1032. Per child, 1,500. See, what is this? Wait, you cannot see this. See, what is this? 1,500 PMC per minor child. 1,500 per minor child. Okay. It's not per month, huh? It's for the whole year. 1,500 for the whole year, but per minor child. Why I have written like this in the inner column? Because it is not fully exempt. See, if something is fully exempt, you put a dash. This is fully exempt or partly? So first write in the inner column, then minus the exemption balance in the outer column. Okay. See, our target is what you know. In the outer column, we have to accumulate taxable incomes. Eventually, we have to calculate the tax. Then in Ramu, next alphabet is U. Income from units of mutual fund. Units of mutual fund. What do you mean by mutual fund? Yes, mutual fund, what they do, they take the money from public and they invest in stock market. Okay. And you know why the concept of mutual fund is there? Because people do not have knowledge of share market. And people are scared to invest in stock market. They feel the money will be lost. But mutual fund people, they are intelligent people. They know where to invest. So if I am a mutual fund, what I will do? I will take the money from the public and invest in the stock market. And whatever returns I get, I will distribute to you. And when I distribute to you, you are getting income. So for you, it is income from other sources. So see, what will happen to mutual fund, that you will study at a CA final level. In inter, you don't have to understand mutual fund taxation. They are big entities. At CA inter level, you have to understand the taxation of an individual. Just like accounts, when you studied for the first time, you were taught only of a sole trader. Then gradually partnership firm came. Then now you study company final accounts also. So this way for income tax, you are a baby right now. You have to understand taxation of a individual people. Partnership firm little bit is there in your syllabus, but big company, mutual fund, their taxation you will study in CA final. So my point was, what mutual fund does, your money they will invest somewhere and whatever returns they get, that they will distribute to you. And for you, for the investor, it is income from other source and that is also taxable. It is not tax free, it will be taxable. So that is U of Ramu. See what I have written? Income from units of UTI and mutual fund. You know why I have written UTI? What is UTI? Unit Trust of India. Actually, you know, the concept of mutual fund, who is the pioneer, you know? UTI. UTI is a government body. They started the concept, let's take the money of public and invest in stock market and give them the returns. The concept was started by UTI. Now there are so many private companies having their own mutual fund, but the pioneer in this line of business is UTI. So whether it is UTI or mutual fund, they do the same thing. And their income is taxable under income from other sources. Means this is from investors angle I am saying. Investor, whatever income they get, whether it is invest from of UTI or mutual fund, it is income from other source, and since I have written here amount, that means it is taxable. Okay. Then D, W, Ramu, till U we have done. Then Fakir. What was the keyword? Fakir. F. F for family pension. Family pension means, imagine some employee died and after his death, wife is getting the pension, or vice versa. Wife was doing the job, she died, and the husband sitting at home getting the pension. He was a house husband. So after the death of wife, he is getting the pension. So anyways, the point is, some employee died and after his death, the family members are getting the pension, and for family member, it is income from other sources. But you know, only if the employee dies. What if the employee doesn't die? He retires. So if the employee is retired, then he is alive. Then who will get the pension? He himself. And when he himself gets, it is income from salary. Because the employee is alive and he is getting from his boss. And whenever any income arises in boss and employee relation, it is income from salary. So see, there are two types of pension. Pension after retirement, pension after death. Retirement pension comes under the head income from salary, because the employee is alive. He will show in his income from salary statement. Okay. But if the employee is died, so he is no more, then family members get the pension. For family member, it is income from other source. Family member cannot say salary. They were not doing the job. So it is income from other source. And even that is taxable. Even that is taxable. But here there is one exception. If the employee was working in Indian Army and while performing the duty in Indian Army, he died. And after his death, his wife gets a pension, fully exempt, under section 10(19). See, the moment I say exempt, you should understand it is 10 only. In bracket it is 19. But that is when, if the employee was not a regular employee, he was working in Indian Army, and after his death, wife getting the pension exempt. Why? See, every time you should understand why. Out of emotion. We also stand up and pay respect to him. That someone working in Indian Army means working for the defense of the whole country. We are nicely sitting at home protected, but who protects us? Army people. So if an army person, he has passed away while performing his duty in Indian Army, so we salute him. So Income Tax Department also gives respect. How? His wife is said, don't worry wife, we are fully sympathetic to you that your husband died in Indian Army, but don't worry, whatever pension you get, it will be totally tax free under section 10(19). So this was F. But see, that is only if army employee. See, here I have written the amount assuming it's a normal employee. If a normal employee dies, then family member getting the pension will be taxable. But if the army employee dies, then I will not even put an amount. Then I will put a dash. Exempt under section 10(19). Okay. So this was F. Next is A. A for award. You know, award. Many times you get award. And if the award is received from government, exempt. And if you get award from some private places, then it will be taxable. You know why? Because when government gives you award, definitely you have done something great. Otherwise, see, nowadays there are so many awards, like this coaching class will give you award, some club, sports club, some sports complex, there are Rotary Club, Lions Club, so many clubs are there. See, these private clubs keep giving the award for small, small thing also. Someone has not done a great thing also award. So that award is not respected. If you have received, congratulations, but taxable. But if you are receiving award from government, definitely you have done something great. Otherwise government doesn't get impressed. But government got impressed and gave the award. Then it is something great, so it will be exempt also. In short, if award comes in the question, what will you check? Is it from government or some other private place? If it is government, then exempt under section 10. 10 is always there in bracket 17A. 10, 17A. 10, 17A. See, slowly you will find there will be a lot of remembering involved. One day you will realize there's a lot to remember. I understand everything in income tax. But only when I revise again and again, I will be confident. You will have to repeat again and again. Because so many things are there. And it is not just you can ignore the section. The sections are important. Like what section came right now? 10, 17A, you have to by heart. And see, by hearting is simple if you put conscious effort. I want to remember. If you intend to remember, you can remember. Like if Katrina Kaif gives his phone number, gives her phone number, I will memorize it. But if you give your phone number, I might forget it also. But if Katrina Kaif or some big actress gives the phone number, I want to remember the number, I will remember. It is all about intention. So here I know you will not feel like remembering, but you have to artificially intend. No, I want to remember, I want to pass in first attempt, I want to get a rank, I want to remember. You intend and you can remember. But if you don't intend, the thing will pass away, it will fade away, you will forget it. So by heart it, 1017A, 1017A, award from government. See, later I will give you one good technique to remember the sections. This is over here. Award from government, I have put dash. Notice the amount column also. Other awards taxable. Then D, W, Ramu, Fakir, G. Okay. After F and A, next alphabet is K. You know what is K? Look at this. Keyman insurance policy. Keyman insurance policy. What is a Keyman insurance? Kind of, but not exactly life insurance. See, life insurance is different. Life insurance we take by thinking that what if I die suddenly? What will happen to my wife, my small children? So to secure my family, I take life insurance. That is personal in nature. We are trying to secure our family. This is a business insurance. You know what is keyman? Keyman is the most important person of the organization. And you know, if some person is very important for the business, business is always afraid. What if that important person dies? He will die, his family will cry. That is not the worry. What will happen to business? So we are worried about business. And for that we take Keyman insurance. See, best example. You know Reliance? Who is the main person of Reliance? Mukesh Ambani. So Mukesh Ambani is the most important person. Keyman means very important person. So for Reliance, Mukesh Ambani is a very important person. So you know, every day, and in the eyes of law, Reliance is a separate entity. Mukesh Ambani is a separate person. Although we know he is the main, but then after all, Reliance is a separate joint stock company. So you know, every day Reliance is worried about what? What if suddenly Mukesh Ambani dies? His wife will cry, his children will cry. We are not worried about that. What will happen to Reliance? What will happen to the business? It will suffer. Actually it will suffer. Huh? Suddenly in stock market the prices will go down, business will affect, they will lose all the customers. There are chances. So it will be a big loss. So to cover this loss, we approach insurance company. So you know what will happen? Look, understand properly. Reliance will approach LIC. What is LIC? Life Insurance Corporation. They will tell LIC that we are worried about Mukesh Ambani. What if he dies? What will happen to our business? So LIC will say it's okay. We have a policy for that. And let's assume we have taken a policy of 20 crores. So you know policy means what? Agreement. Policy means agreement of 20 crores. And you know what is the agreement here? Every year Reliance will pay some premium. And suddenly if Mukesh Ambani dies, LIC will give that 20 crores as promised. And with that 20 crores, what will happen, we are not able to stop the death of Mukesh Ambani. Someone has to die, he will die. But after his death, we will be able to absorb the loss. Why? Because his death will result in loss. But at such event, LIC will give 20 crores. So with such a big amount, we can survive in the lost time. See, why do you take fire insurance? Because if the goods are lost by fire, we need compensation. So here it is same. If the business is lost, business is suffering loss due to the death of key man, we will get some compensation. So this is the idea. See, with the drawing, you will understand better now. Huh? Look, wait. Same example. Assume Mukesh Ambani, he is the key man, very important person, and Reliance is worried day in, day out. Day in, day out, they are worried about the death of Mukesh. And they are worried about not his family, about their business. So now what will happen? Every year Reliance will pay premium. And suddenly Mukesh Ambani dies. What will happen? LIC will give big amount. Assume 15 crores, whatever. That amount is agreed in advance. So this amount Reliance will get. So this is scheme and insurance policy. Now the main point. Taxable or exempt? See, whatever I am discussing, we are not having a general talk. It's not a talk show. Everything should boil down to taxable or exempt. It is taxable. Why exempt? It will be taxed. Income tax department has got no reason to free this income from tax. It will be taxable. Means the moment Reliance gets 15 crores, Reliance will be showing this as income taxable. But this income is actually income from business. You will wonder then, why are you teaching in this chapter? I will convince that also. But actually this income is income from business. Why? Why did Reliance take the insurance? To secure the business. See, we are worried about what? What if Mukesh Ambani die? What will happen to business? In order to protect the business, I have taken the insurance. That's why it is income arising from business. It will come under the head income from, there are 5 heads, remember? It will come under the head income from business. And it is taxable only, but under the head income from business. So see, I have written here, look. Can you see IFB means what? Income from business. But then you will wonder then how it is income from other source. So look here. Sometimes what happens? The thing which you are worried about, then what if Mukesh Ambani dies? He doesn't die. And after some years, the policy matures. So such policies have got a maturity period. It has a life of 10 years, 15 years. So let's assume the policy was of 20 years. And 20 years passed away and Ambani didn't die. So after 20 years, the policy becomes matured. And on maturity, LIC will give the amount. And remember, the Ambani is still alive. So now imagine this big amount Reliance is getting. It's like a bonus. See, Reliance was worried, what if Ambani dies? But he didn't die. And the policy matured and a big amount is received by Reliance. So in such event, sometime what happens? Reliance might give that money to Mukesh Ambani. Reliance might give that money to Mukesh Ambani. Saying what? Ambani, you are still alive. We were worried that what if you die? But you are still alive and the policy is matured also. So do one thing, take this all money, you keep it. Generally it will not happen, but it might happen that Reliance passes away all the funds to Mukesh Ambani. Then it will become Mukesh Ambani's personal income. Then income from other sources. Read. If Mukesh Ambani gets some money, actually he doesn't have a right. With LIC also, who entered into agreement? Reliance. It was an agreement between Reliance and LIC. Reliance paid the premium. They will get the money. But it is just an understanding between Reliance and Mukesh Ambani that it might happen that in the shareholders meeting they decided that we give away the money to Mukesh Ambani. And that is also very rare, I remind you again, it's rarely happening. But if it happens, then income from other source. See, though it is rare, but still why I am making it happen, then only I can tell my students it is income from other source. Otherwise, how will I make it as income from other source? Understand my feeling, I am teaching income from other sources. But otherwise, trust me, 90% cases, what will happen? Reliance will only keep the money. And for them, it is income from income from business. Okay. So in short, this has got two places. It can come anywhere. And question will be clear. You will be able to decide by reading at the question. But can you see I have written dash or amount in the outer column? It is taxable. Now, see, Mukesh Ambani might be worried about his family also. Who is the wife of Mukesh Ambani? Neeta Ambani. He has got children also. They had a grand wedding right now. Okay. So now Mukesh Ambani might be worried about his family also. So now if Mukesh Ambani wants to protect his family, that is tension of Mukesh Ambani's personal tension. That Reliance will not take care. Reliance is for business. So if Mukesh Ambani is worried about his wife and children, he will take life insurance policy. That is a normal life insurance policy. It is not key man. It is normal life insurance, which we call in our day-to-day life. And for that, Ambani will approach LIC. There will be agreement between Ambani and LIC. And there, if Mukesh Ambani dies, the money will be given to the family member. And for family member, it is tax-free. A new point has started. Key man point is over. I started a new point. If life insurance money you receive, it is tax-free. Why? Because life insurance is taken by money-minded people or family-minded people. Family-minded people. Key man taken by money-minded people. See Reliance, how it was money-minded. To hell with Ambani, he dies, his family cries, forget it. What is happening to the business, we are worried. So if you are money-minded, taxable. But if Ambani, he is worried about his wife and small children, not small, big. So if he is worried about his children, family, then it is a good feeling. Then he is becoming money-minded or family-minded. Then income tax department will also exempt it, whether it is received on death or maturity. But in the question, they will write life insurance then only. You have to see the word. If they write key man, taxable. Money-minded, money-minded. If they write life insurance, exempt. Exempt under section 10, 10D, 1010D, 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 by heart, 1010D, life insurance policy. But see, be careful, don't see the word insurance. See the word, whether it is life or key man. Okay. If they write life, then it is exempt under section 1010D. Are you notice I am explaining the logic also, because here you are becoming a family minded. K is over. Next alphabet is I. See, actually my experience says this point comes less, this point comes more. Which one? Life insurance. Because it is becoming exempt, and paper setter, he loves to test your knowledge of section. So he will deliberately put life insurance, and you are also smart, you will also remember the section 1010D. Now next alphabet is I. I for interest income. I for interest income. Now see, how do you get interest income? By investing here and there. Either sometimes you put the money in bank, or you deposit somewhere, or you invest in debentures, bonds. So interest has got various sources. So interest income, what do you think? Should it be taxable or exempt? Taxable. See, everywhere you check, it is not falling in other heads. What were the? It is not salary, it is not house property, it is not business, it is not capital gains. So it is income from other source, and it is taxable also. But there are 4 interest incomes, look, which are exempt. I have made a keyword for that. Look here. Can you see GPS? GPS is a short form. Under GPS, there are certain items of interest income which are tax-free. I'll tell you the full form. Look, G for gold bonds. Interest on gold bonds. Look at this. Gold bonds. You know what is the gold bonds? In this, you have to invest gold. Generally you invest money, but gold bonds are bonds where you will give your gold to government. Imagine at my home there is 1 kg gold. Example, don't get serious. At my home there is 1 kg gold. So what I can do, I can give my gold to government and they will give in return a certificate, bonds. Bonds are a paper only, no? So they will give me bonds and my gold will be taken away by government. And my gold is not gone. On maturity, I will get back my gold. Redemption. Bonds will be redeemed after 10-15 years. So whatever gold I gave, I will get back. So my gold is not lost. It is blocked. I will get back. And till I get back every year, I will get interest also. It is a good facility. Imagine if my gold would have been at home only. So it would have appreciated. See, appreciation will happen this way also. When I get my gold, I have got 1 kg gold, they will give 1 kg only and the value will be appreciating only. But if I keep it at home, I will not get interest. The gold of 1 kg will remain gold of 1 kg only. But same thing if I give it to government, so my 1 kg gold I will get back and every year I will get interest. I am able to monetize my gold. I am able to monetize my gold and that interest income will be exempt. Why? Because these bonds are issued by government and government wants that people should take interest in this. See, whenever government wants to attract people, they make attractive rules. So here what was attraction? Come on India, come on, invest your gold in our bonds. The interest which you earn every year, it will be tax free. So that incentive is given so that people will take interest. And you know why is government behind give your gold, give your gold? Because people waste the gold at home. Imagine I have got 5-6 kgs of gold wasting at home. See, I am feeling proud I have got so much gold. But actually it is a wastage. See, if I start a coaching class, it is not wastage. Your education is being spread. It is a productive asset. But gold is what? Unproductive. It appreciates. It is giving me pride. But it is being wasted at my home. That's what government said. Don't waste your gold. Give it to us. You will get interest every year. And you know what government will do with the gold? They might melt the gold and they will make the best use of the money. At the end I will get my gold, maybe in a different shape. But at least government can take gold of people and they can make some better use of that. And investor is also getting the advantage that every year they are getting interest. So it is a good scheme. But this scheme doesn't come every year in India. It came in 2015. Before that it came in 1999. Only 2 times only this scheme has come in India. 1999, 2015. So whenever in the question they give gold bonds, they will write like this. Gold bonds under gold monetization scheme 2015. So you don't have to do something with that here. It is just they will write like this. So you should understand, oh, this is the gold bonds which sir was teaching. And interest on that is exempt. See, main point is interest will be exempt. Reason? Because it is government bonds, government wants to promote it. And section for this is 10-15. 10-15. Okay. Then one more alphabet. G was gold bonds. Huh? Next alphabet is interest on post office savings bank account. I call this as POSBA. 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 Post office savings bank account means even in post office people have bank accounts. Okay, like you normally open bank account in a bank, but in post office also there are investment schemes. There are many schemes, huh? But if you invest in post office savings bank account, the interest of that is exempt. Okay, reason? Because post office is owned by government. See, in all these items you will find a common reason. The backing of government. And whenever government wants to attract people towards it, they exempt the income. So even post office business is run by government. So if you open an account in post office by the name post office savings bank account, your interest income will be not totally exempt. They say exempt up to 3,500 only. You will have to remember the amount, you will have to remember 3,500, 3,500, 3,500. This is a fixed amount, up to 3,500. Now you will wonder why only 3,500? Because see, usually in this post office savings bank account, You anyways get a very nominal interest. Savings account is for what, so that your money should be safe somewhere. See, everyone is scared to keep the money at home. We worry, what if a thief comes at my house and steals the money? So to keep the money safe, we prefer either bank or post office. So money is kept safe in post office, and there you don't get much interest. Hardly you get some, 4-5% interest. Hardly. Very nominal rate of interest you get. So already the interest income is so less. So government says 3,500 is sufficient. But if someone is a fool, he has kept crores of amount in post office savings account. Usually people never do. A wise person, what he will do, he has got so much money, he will make FD. Because savings account will give very less interest. Only a fool will put all his money in savings account. Okay. And in case you put so much amount in savings account, then you will get so much interest. In amount terms, you will get big amount, but government says we will exempt only up to 3,500. And normal wise person will not generate more than that only, because we keep a little bit amount only in savings account. This is not a savings account in bank, it is a savings account in post office. See, government feels that no one is taking interest in post office. Everyone is going behind the banks. Come to our post office, open an account over there. Whatever interest you get, of that 3,500 will be exempt. Balance will be taxable. So, second amount you are remembering, second amount. In minor child 1,500, here it is 3,500. Section, there it was 1032, here it is 1015. Same section for gold bonds, same section for POSBA. Okay. There is one more P, can you see? PPF account, Public Provident Fund account. Public Provident Fund account. This is very famous. At home, your parents might be talking many times that I have put so much in PPF, so much in PPF. I don't know whether you take interest at home or not, but it is so famous that every family has got PPF account. What is the full form? PPF? Public Provident Fund account. So you know why it is called public? Because this account can be opened by anyone. See, one provident fund is there which is there in jobs. When you do job, there also there is some provident fund. That is different. This is the general public account. That's why the name is Public Provident Fund account. This account you can also open. If you want to open this account, where you have to go? You go to any bank. Go to any bank, Bank of Baroda, State Bank of India. Go there, tell them I want to open PPF account. They will give a form, fill the form. That account will be created. And interest from that account is tax free. Why? Because although this account you open in a bank, this account is managed by central government. It is a government scheme. Basically, government started this scheme. Why? Government wants that people should save the money. See, people going in job, they automatically have the provident fund in the job. But what about general people? Everyone should make some arrangement of provident fund. See, provident fund is a arrangement so that you can survive in old age. So they are trying to encourage general public, come on public, go to any bank, open an account, save your money. It will help you in old age. And government is so desperate to encourage this, that's why they are exempting it also. And government's formula has succeeded. There are many people, almost everyone has kept PPF account. And you know how it is helping the general public? It is becoming a source of your old age. In old age, when you are having no income, your children will throw away from your house. You don't have anything to survive, that PPF money will help you. So that's why, see, sometimes government does something in public interest. Public is, sometimes, dumb. That's why government says open PPF account, we are telling for your benefit only. But you are not understanding your benefit, so we are giving incentive also. And the incentive is interest will be exempt. But here the section is 1011. See, everywhere the logic is same, because these are government investments. They are trying to attract people. Gold bonds, POSBA, PPF. Gold bonds 1015, POSBA 1015, but exempt up to 3,500, PPF 1011. Then there is one more account, Sukanya Samriddhi account. Can you see this as Sukanya Samriddhi account? Sukanya means girl child. Samriddhi means growth, development account. Sukanya Samriddhi account. Sukanya is a Hindi word for girl child. Now see, there are many family, they ignore the girl child. See, traditional India I am saying, our traditional India was what if a boy is born in a family, they give lot of importance. Girl is ignored. But that is bad. Nowadays that discrimination doesn't happen, but I am talking about the traditional India. So that's why, but still there are some people in villages, they have the tendency, they don't give importance to girl child. That's why government of India says, if you give importance to your girl child, giving importance means create some savings for him, for her. Means you have to open one account in the name of that girl child. Keep depositing the money and that money will eventually go to the girl child. If you do something for your girl child, interest thereon will be exempted. Basically government is encouraging, think of girl child, everyone thinks of boy child, okay, because boy remains with you only, girl will go to other family. So some people have got a very crooked mentality, they don't give importance to girl. So in order to give importance to girls, government says you should have your girl child's account in a bank. This account also you can open in any bank. Actually the account is managed by central government, but you have to do the form filling work in the bank only. Procedural thing you have to do it in the bank, but it is government's account by the name Sukanya Samriddhi account. Okay, I have also created an account for my girl child. I have a boy child and girl child, and for my girl child I have a account in State Bank of India. I went someday, I didn't go, actually my wife went. My wife went to State Bank of India, she filled the form, I created a Sukanya Samriddhi account. And what is the benefit, On that account, whatever interest comes, actually the interest is the girl's income, child's income. And anyways, minor's income will go to parent. But this will be tax free. Because the income is in the nature of Sukanya Samriddhi account. So although it is a minor's income, where parent usually gets only 1500 exemption. Only exemption of 1500, but here it will be completely exempt because it is Sukanya Samriddhi account. So that means if my daughter has got some other income, then exempt up to 1500 for the parent. But my daughter is having Sukanya Samriddhi account interest, it is totally tax free under section 11A. Sorry, 1011, yeah? 1011A. So see, 1015 had two things, gold bonds and POSBA. 1011 PPF, 1011A Sukanya Samriddhi account. All our investments of government, you invest here, interest income exempt. See how to remember this, Gold bonds, POSBA, PPF Sukanya. Gold bonds, POSBA, PPF Sukanya. You have to rhythm it. Gold bonds, POSBA, PPF Sukanya. Gold bonds, POSBA, PPF Sukanya. These are exempt. So the moment you see interest income in the question, that rhythm should start. Gold bonds, POSBA, PPF Sukanya. Gold bonds, POSBA, PPF Sukanya. If that is their exempt, rest all taxable. Okay. Tell me in the question they give interest on bonds of Infosys. Taxable. See, they can give anything. But you have to be formed with gold bonds, POSBA, PPF Sukanya. Only that is exempt. Rest all will be fully taxable. Interest is over. Next income is royalty. Royalty income, how do you get? For example, I write a book, like my CA final direct tax book is there. I have written a book, and from that book I get royalty income. How royalty income is earned? See what I have done, I wrote my book of income tax and I gave it to a publisher in New Delhi. There is a publisher in New Delhi, and what is our agreement, he will print books, he will market the books across the India, and whatever sale happens, 10% he will give it to me. Why only 10%? I am the author of the book, but I will get only 10% because printing of the books, marketing of the books, all the cost, distribution, etc. who will bear? Publisher. As an author, I just have to write a book and give the data to the publisher. For that I will get my commission. We don't call it as commission, we call it as royalty. And that is usually in real life 10%. There is no rule as such. If I am a very famous author, I can dictate that whatever sale happens, give me 25% as my share. But usually in the market there is a trend of 10% author will get, and that income is royalty income. and even this is taxable. See, I am explaining the nature of the income, but we are more interested in what taxable or exempt? Taxable. Taxable. See, income will be given in the question only. It is just as a sir, it is my duty to explain what is royalty. I have to explain. But for a student, it is given in the question. You just put the amount in the outer column. That's it. So D, W, Ramu, Fakir, G. G for gift. Gift is also treated as income. Okay. But gift has a big theory. It will be discussed later. Only after we solve few sums, we will be in a position to handle that big theory. Actually, theory is big. It is not tough. Trust me, you will not find anything tough. Toughest things also I have simplified. It is just because theory of gift is very lengthy. At this stage, it is not proper to do. It will be discussed later. So I am keeping the theory of gift pending. See what I have written here. Look at the screen. To be discussed later. Later means soon only, but after we have a hands-on experience on few questions, we can take the theory of gift. But see, can you see I have put amount also and dash also? Means gift, sometimes it is taxable, sometimes it is exempt. But that is what we have to study in detail. And this way, the total of the statement is called taxable income from other sources. See, although I have covered all the incomes which are usually found in the question, by chance if you find some income which I didn't discuss in D, W, Ramu, Fakir, G, don't worry. Just put the amount in the outer column. If something is exempt, be assured I have taught you. But if you find some random new income which you have never heard, then don't think, sir didn't teach this income only to us. It's okay. If I am not taught means it is taxable. But trust me, most of the incomes in the question which you find, it will be from D, W, Ramu, Fakir, G, etc. That's why see I have kept etc. here, so that anything is possible. But that those incomes, there is nothing to discuss about, they are all taxable. So our basic theory of D, W, Ramu, Fakir, G is over. Okay. Now after this theory, next comes what? Look here. Just have a, I am just showing the screen purposely so that you can rewind. See, this is what we did. Okay. Till here we did. Okay. Now the next theory is summary of the sections. Because see, I have knowledge, I keep saying everything. But you have to store everything, na? So I need to summarize the section which I did. Did you notice these are the sections we did? So many sections we studied in the journey of D, W, Ramu, Fakir, G. So tell me one by one. Do one thing, I give you 1 minute time. You just keep the answer ready in your mind. Then we will discuss together. Based on whatever memory you have, recall what was all this. That's what, see, while I am explaining, that time only you should by heart thoroughly. Otherwise, see, I have successfully completed DW Ramaphosa theory. I have succeeded. But your success depends upon whether you remember or not. So now you test how much you remember. So if you are not able to remember, at least learn one thing, that next time when sir is teaching, while the sir is teaching, we have to memorize simultaneously everything. Because then only you succeed. See, your success doesn't depend upon understanding. Understanding, you are not doing a big deal. I am there to make you understand. Your success depends upon whether you can remember thoroughly or not. I understand everything cannot be remembered in one shot. But try at least, so that you require less repetition. If you don't try only, you will have to repeat the things 10 times. But if you try seriously, you will have to repeat 2-3 times. And then the things will be memorized. So see, let's start. What was 10-1? Agriculture income, but that also in India it should be. Huh? Then 10-17? No, MPs and MLAs daily allowance. Daily allowance of MP and MLA. See, I have written here. Then 1017 awards. Award received from government. Don't say by government, from. I received award from government. Then 1019, army employee died. After his death, family member getting the pension. Family pension after the death of army employee was 1019. Then, yes, very good. Income of minor children on which parents have to pay the tax but exemption of 1,500 per minor child. Then, very good. Life insurance policy 1010D. Life keyman insurance is taxable. Huh? They are money-minded people. But life insurance where you try to secure a family, wife, children, then that is family-minded exempt. 1010D. Then 1015 was gold bonds and post-bar. Gold bonds and post-bar. Okay. I have just written interest income, but interest income on gold bonds and post-bar. 1011 was PPF, Public Provident Fund account. Very good. Your memory is sharp. Then Sukanya Samriddhi account. Sukanya Samriddhi account. Okay. So see here, look. Actually see in my Hindi batch, I give very good technique because this technique is little bit Hindi language oriented. But I can try on you also. See, explanation part is done in complete. See, this batch is complete English batch. I am not allowed to use any Hindi word. But just for the sake of some technique, I will use some words of Hindi word. Maybe you know that, so it becomes a good technique to remember. See, like everywhere Hindi will not come, huh? But somewhere some Hindi terms will come. Just as a technique to remember. See, 10-1, you know how to remember. In India, agriculture is given last importance or first importance? First. What is this? 1. So 10-1. See, memory depends upon, you know, how you can relate. If you want to remember something, you have to relate and associate it with something. So how did I relate 1 with India gives importance to agriculture, not the last importance. They give the first importance. So that will make you remember 1. See, right now you remember. But my target is to put it in your long-term memory. There is one short-term memory also. Short-term memory is very strong. Half of the thing you answered right now. But if I ask you this thing after 10 days, you will not be able to answer. But if you want to put it in a long-term memory, use my technique. So in India, we give agriculture as first importance, so remember 1. Now see in Hindi, see I am from Mumbai, so we usually call, there is one thing called Satra pe khatra. I don't know whether you people have heard or not. Satra. Satra means 17. Satra in Hindi is our 17. And in Mumbai we have a slang. Satra means the moment we see 17 number, we find a danger. Satra pe khatra. Khatra means danger. So see, how I remember here. Satra pe khatra. Khatra se government. Government ke log. Government ka award. I said both. See, Satra will make you remember khatra, and khatra means government. See, when you pay tax, you feel government is a khatra only. Khatra means danger only. They will take away the tax. People take it like this only, na? So Satra means khatra. Khatra means government. So both these Satras means 17s are government oriented. But in one, there is government people. Another, government award. Which I tell in my Hindi batch, government ke log, government ka award. Log means people of government. So government ke log, government ka award. And award has got A also. Can you see this? A will remind you award. A for award. 17 will remind you Satra pe khatra, khatra se government. Government ke log, government ka award. Okay. Then family pension. You know, you watch movies. Many times in the movies they show that some newly wedded couple, newly married couple, and suddenly after the marriage, immediately after the marriage, next day the husband has to go to army on border. Imagine some filmy situation. Means a couple, they were in love, they got married, and the moment they got married, suddenly the husband got a call from army. So husband got shifted to border, okay, and suddenly the news comes he died. There was a war in border, he died. And that young girl became widow. And in my Hindi बैच ऐसे 19 साल की लड़की बेचारी की शादी हुई थी. Poor, she got just married. अरे 19 will remember age. 19 is the age. I don't know this kind of movies you have seen or not. Even in Hyderabad, there is a good movie culture. So in movies they show that young couple, they got newly married. They were very happy and excited. But after marriage only husband is shifted to border. And next day the call comes, he died. And that girl of 19 years old, she became widow. And now she is getting pension. So that 19 is the age. See, memory means what? You have to relate, you have to make something so that 19 has a connection. Otherwise, plain 19 is a number, what to do? But here 19 is an age of the girl who got newly married and her husband passed away in border, okay? And which happens usually with army people. Then, minor child. You know, in Hindi we say, minor is a child जिसका अभी तक 32 भी नहीं आया. 32, you know 32? You know 32 is for 32. And you have got how many teeth, you know? 32. But you get full 32 teeth when you become matured, major. But when you are a child, like imagine when you were 10 years old, did you have all 32 teeth? You have got only few, you are having few teeth. So minor is a child who has not even gained his 32 teeth. Means minor वो होता है जिसने अभी तक 32 भी नहीं आई उसकी. 32 मतलब 32. Okay. So just remember, see, in my Hindi batch it goes, because in Hindi this is very normal. 32 भी नहीं आया, all that. Okay. But it's okay. You can remember 32 teeth. In English also we have got 32 teeth only. So minor means he is not grown up, he is a child, he has not even gained 32 teeth. Okay. Then life insurance. Tell me who takes life insurance? The one who is worried about death. D for death. 10 D. D for death. And the one who is worried about death, he is taking life insurance. Okay. So D will remind you of death. Okay. Then this 10-15 actually doesn't have a good technique. Huh? But actually what was 10-15? Gold bonds and post-bar. Gold bonds and post-bar was there. But see, one far away technique I have made. Do one thing, just count the number of alphabets in interest incomes.
16.
No, your counting is wrong. Count the alphabets in interest income. See, we will count together. Look. I, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. There are 15 alphabets in interest incomes. And it is not just incomes. There are two items, gold bonds, post bar. It was only just one kid or two things. So interest incomes, it has 15 alphabets, so you can relate. See, once your memory is trained, accordingly you can remember. 10, 15, interest incomes, not just incomes. There were two things, gold bonds and post bar. Then, PPF account. See, in PPF account, in my Hindi batch I say like this, PPF account इतना famous है, एक के पास PPF account होता है, एक. Okay, you people understand Hindi? Okay, good यार. Okay, so PPF account इतना famous है, हर एक के पास होता है, और sometimes we say एक के पास होता है, एक means 1 and 1, so 1. And actually it is famous, huh? You do survey, go door to door neighbors. Every neighbor will have PPF account. So it is so famous that एक के पास होता है. So एक means 1. Then for this there is no technique, but I have made one technique. You know what? My daughter's name is Anika. So I have remembered this A. And actually, like PPF, Sukanya and PPF are both account opened by government. Huh? Actually, you know what is the common thing in Sukanya and PPF? Both the accounts are of central government. But for both the accounts, you have to open the account in some bank, State Bank of India, Bank of Baroda. Only thing is PPF is for general public. Sukanya is for girl child. So both are similar in nature. Both are government's accounts. So both have got 11. But with A, my daughter's name comes. A for Anika. She is a girl child only. This I can remember now. I am your sir. You also have to remember my daughter's name, Anika. 11A for Anika. Okay. And actually I opened an account for my daughter Anika in SBI, Sukanya Samriddhi account. In short, something you have to relate so that, see, this way you will come across many sections. Sometimes I will give you the tricks. Sometimes you make some tricks so that you can relate and you can put it in your long-term memory. See, challenge is to put it in a long-term memory. Short-term memory, you don't need all these things. Short-term, everything you remember, but only for one day. Then it fades away. So sections are done. In short, see, best way to remember, out of D, W, Ramu, Fakirji items, only these are exempt. Rest all items in D, W, Ramu, Fakirji, taxable. So this you should buy heart thoroughly. All other items are eventually taxable only. And tell me where there were amounts to remember. Only two places. Minor child 1,500 and POSBA 3,500. Okay, only two places there was amount. Minor child 1,500, POSBA 3,500. Okay. Now see, after this, look here. There is a theory on deductions under section 57. Okay. Now see, new theory starting. My part 1 was, see, I am taking this chapter in 3 parts. First, D, W, Ramu, Fakirji, understand taxable, exempt, that we did. Now second phase, theory of deduction. Then third phase will be theory of gift, which I have kept pending. Then the chapter is over. Okay. Now, deduction. See, in income tax language, whenever we use the word deduction, it is meant for expense only. And you know why income tax department gives importance to expense? Because every income comes, but for that you have to spend. Like see, when we do coaching class business, we get income from students, but then we have to spend also. Income doesn't come from sky. To generate the income, we have to spend. So every income is generated because of some expenditure. So what government says, okay, we understand, to earn any income, you have to incur some expense. So you net off your expense. You net off your expense and you pay the tax on the net amount. And this rule is made by section 57. Basically, section makes rules, right? So section 57 says, come on India, D, W, Ramu, Fakir, G, if you are earning, and to earn that D, W, Ramu, Fakir incomes, if you have incurred some expense, you can net it off. And you pay the tax on net amount. Okay. And see, I have seen students, what blunder they do. Sometimes instead of exempt, they write deduction. And for deduction, they write exemption. See, now a new word has come, deduction. So students, interchange the word. If you have to write the word exemption, you would write deduction. Paper checker will get angry. Tell me how to decide which word to use. Exempt word is for incomes. See, there is an income. Some income is coming, government says don't pay tax, don't pay tax. So if your income is freed, your income, listen to the word income. If your income is freed from tax, it becomes exempt. But deduction word is used when there is some expenditure. Only when there is some expenditure, you should use the word deduction. Okay. So be careful while you are using the word deduction and exempt. You train your mind like this only. For incomes, the word is exempt. And for expenses, it is deduction. Okay, now look here. This is just a basic thing. Now there are 5 good points I will teach you. And then this theory will get over. 5 good points, okay? See, I will show you the summary in advance one. Look. Can you see example 1? Look at this 1. This way you will count 5. 1, count here 1, then 2, okay? Then 3, okay? Then 4, okay? Then 5. So from my side, 5 good points will come. And these 5 things you have to remember, it will help you in solving the sums. Okay? Keep remembering, deduction, 5 things we have to remember. Deduction, 5 things we have to remember. So see, first point. Try this example. This is just an example, try. Rent of plant and machinery received 5,000 per month. Expenses on repairs. I am teaching the rule of expenses now. So that's why I have highlighted by red pen. First tell me, what is the rule of rent of plant and machinery? Where was it in D.W. Ramu? D.W. Ramu R. There were 3 R's. First R was rent of other assets other than house. So plant and machinery is not a house. It is other than house. So that was in D.W. Ramu, and that we know it was taxable. Now what we are learning? What to do with the expenditure. So as I said, deduct it. So how to deduct? Look, first, what is the rent amount you got? 5,000 per month. You will multiply by 12. Huh? Why? Because we prepare the statement for a year. Income tax reporting is done from year to year. And by the way, you know what is our year in the exam? 24, 25, I told you at the beginning today. Year means don't think of random year. It is 1st April 24 to 31st March 25. So it is 12 months. So multiply by 12 months. Multiply how much? 60,000. So this I will write first in the inner column. And then I will minus the expenditure of 12,000. See, 12,000 is not given per month. It's full years. It's per annum. So minus it. So in the outer column you will get the balance. And see the presentation. Be careful about presentation. Students present anyways they want. You have to write systematically less deduction under section 57. They keep marks for this also. Simply putting the amount and minusing and giving the net amount, that will not fetch you marks. You have to write less deduction under section 57. Okay? And then minus it. And see, don't think that something for rent I have taught. See, rent is just an example. For that matter, any income you take, if any income you find some corresponding expense, deduct it. See, for example, I have to take something, na? So don't buy it. Suresh taught something special about rent. It's not about rent. Any income for that matter. Okay, so one thing is over. This was a basic thing. Now try the second example. Try this. Agriculture income 5 lakhs. See, agriculture income is exempt or taxable. If it is in India, it is exempt under 10(1). Now, have they told us it is in India or not? Problem is silent, make positive assumption that it is in India only. Whenever problem is silent, make positive assumption that nothing is given means it should be in India only. So it is exempt under section 10(1). But they have given some expense. So you know what students do? They minus here also. Sir is told to deduct the expense, I will deduct the expense. Deduct the expense but only for taxable incomes. Exempt income we put dash. And when the amount is only dash, so what plus minus? Nothing, just put a dash. That means you will ignore the expense given. They will give you the expense to fool you. But you are smart enough to understand that dear, this is exempt. So I have to put a dash. So I will not get carried away by the expenses. So see what I have done here. Simply dash. But you know why I have to teach this? Because see, in the previous example, what did I say? See students, whenever you see the expense, you should minus it. But be careful. Only when the income is taxable, you minus the expense. But if the income is only exempt, you just put a dash, ignore the expense given in the question. Okay? 2 rules we have made. Taxable income, deduct the expense. Exempt income, ignore the expense. This way 5 rules will come. Huh? Now next rule, try this. Winnings from lottery. It can be any winnings, a horse race. Nowadays online games, gaming winnings are there. So tell me, now winnings from lottery is what? Exempt or taxable? It is taxable. And right now what did I say? Taxable income, deduct the expense. Exempt income, ignore the expense. So winnings is taxable income. So you should deduct the expense. Okay. But for winnings, government does not allow you to deduct the expense. This is an exception. Generally, any taxable income, deduct the expense. But for winnings, expenses are not allowed. Why? Because government feels, look here, winnings is not from the expenditure. Winnings is from the luck. You are lucky to win. You didn't win because you expended. See, if expenses can give me the winning, I am ready to expend. I will win a lottery, okay, I am also ready to expend. See, by expending, you don't win. You win because of luck. So winnings is connected with luck. It's not connected with expense. So for expense, government says, it is not because of expense you got the winning, you are lucky. So expenses has got no connection. In my Hindi batch I say, lottery खर्चे से नहीं लगती है, किस्मत से लगती है. लॉटरी का किस्मत कनेक्शन, not खर्चा connection. खर्चा means expenditure, kismat means luck. So in short, lottery has not been won because you are spent. See, in my coaching class, I will earn income only if I spend. If I have a benches, classroom, projector, camera, if I spend, then only I will get the income. So fees from students is because of luck or expenses. So we deduct also. Anyways, coaching class example is wrong. In income from other source, it is a business, huh? It will come. But anyway, the point is what you know. I get students' fees not by my luck. It is by expenses. Every income comes from expense, comes from effort, hard work. But this is coming from no effort, no hard work. It coming merely from luck. So that's why government is not ready to allow you any deduction. And see, government also says you got free income. Nicely, many times, online games you play, you win 50,000. Luckily. So it is effortless income. So government also wants full tax. If government gives you some deduction, amount will become small. Okay, tax will become small. That government doesn't want. Income is free of cost. Free of cost means actually you have incurred. See, you have purchased lottery tickets. In gaming also, if you play some games on mobile, you have to do some pay registration charges, etc. Some expenses are there, but government doesn't give importance to those expenses because you are getting effortless without hard work any income. So government wants full tax. So 3 rules we have set. Can you see this third point? See, try to generalize. Taxable income, deduct the expense. Exempt income, ignore the expense. Winnings also ignore the expense. Although it is taxable, but ignore the expense. Any type of winning, whether it is lottery, horse race, any type of winning, ignore the expense. Then comes 4th point. Look here. Try this. See, winnings was an exception. See, last point, don't think winnings was just an winning specific point it was. Now the next point is dividend specific. Tell me, in general, dividend is taxable. Yes, so as per general rule, taxable income deduct the expense. So what you should feel? Okay, dividend is taxable, right? So I should minus the given expense. Just read the expense, what expenses are given. See, bank charges is what you know. Normally, when companies give dividend, it goes to my bank account. And bank has to put some efforts to collect the dividend in my bank account. For that, bank charges something. So there is some bank charges. Plus, what is this interest on loan? What is this? To invest in shares. I might have taken loan. On that I pay interest. See, you get dividend from where? From the sky. From company. Only when you invest in the shares. And to invest in shares, sometimes you have done borrowing. So when you do borrowing, you have to pay interest. You have to pay interest. Feel the word pay. So that becomes expense. So many times you are getting dividend, but to earn dividend, your investment was done from borrowings. And on that borrowings, you paid interest. See, I am talking about expenditure, right? Wait. So, expenditure. So interest on loan is also an expenditure. So tell me, normally what student will do, look, dividend income, let us write in the inner column, then minus bank charges 1000, interest on loan 26,000, outer column how much you get? 73,000. See, this is the way usually you would like to present. Wait, it's not seen on the screen, I will show you properly. Wait, now can you see? Inner column dividend 1 lakh, less deduction under section 57, bank charges and this. You would have done like this only. But in dividend income, law says you will not get any deduction, you will get only one deduction, interest on loan. No other deduction allowed. Reason I will tell you. But for dividend income, you are not allowed to minus any expense. Only one thing you can minus, which is interest on loan. Can you see this? Interest on loan. This is the only thing allowed by the government. So see what I will do. Reason I will tell you. Have patience, huh? So what I will do? I will cancel this because government doesn't allow. See, not just bank charges. Nothing is allowed. Only one thing is allowed. Which thing? Interest on loan. So see, interest on loan I am putting a tick mark. Tick mark means that I will consider. And here also there is a limit. See how much interest I am paying? 26,000. But government says maximum 20% of your dividend income. Maximum 20% of your dividend income. So what is your dividend income? 20% is a fixed rule. Just give me some time, I will explain the logic also. But first calculate 20% of 1,20,000. So maximum 20,000 you can minus. Maximum. And maximum is not more than that. If it is less, it's okay. See, limit means what? Not more than that. If it is less, take less only. So what was my limit? 20,000. But our amount is less or big? Big. So 26,000 will have to be curtailed. It will be curtailed to 20,000. So look here. I have written here originally 26,000. See what I am doing? I am making some changes. See 26,000 I have cut. And there I will write what? 20,000. Wait. 20,000. Let me write here. Okay. And then outer column amount will become 80,000. See, I will show you properly what I have done. Look here. So finally what I did, bank charges ignore. Interest on loan, actually it was 26,000, but I restricted to 20,000. How did I get 20,000? 20%. That is the rule. Why the rule is made, I will tell you. But 20% you can minus. But tell me, what if instead of 26,000, this was only 6,000? 6,000. Then you minus 6 only. See what government says, 20% is a limit. Limit means what? You should not take more than that. If it is less, you take less. You can make a formula also, whichever is less. That formula works, whichever is less. Try, what if this was only 6,000? So 20,000 limit, 6,000 is actual, whichever is less, 6,000. Actually, you don't have to make a formula. Conceptually, you can do, na? It is just, it should not be more than 20. If it is more, we will take 20 only. But if it is less, we will take less, the actual figure only. Okay. But tell me why now? See, this is, I am simply informing the rule. The rule is like this. But then why? See, logic behind this is what you know. Dividend income is the income of rich people. Do you agree? Yes, sir. A poor class or a middle class will never have a dividend income. Because for dividend income, you have to invest in shares. And you know, a lower class or a middle class person is afraid of stock market. Why? Because he always thinks, if I put my money in stocks, what if my money is lost? You have seen people have come to roads if they lose in stock market. Okay. So people sometimes feel stock market is very risky. And that risk appetite only rich people have got. If I am a poor person or a middle class person, what will I do? If little bit extra money I have, I will put it in bank FD. So that my money is safe. I will not have the daring of investing in shares. So who invests in shares? Rich people. And rich people have got lot of money. So government says, you rich people, you have got so much money, where will you take the money? Pay tax. Why you want to minus this? By minusing, you want to make your income small? Why you want to make small? Why you want to pay less tax? You are already rich, na? You have money, pay tax. See, basically government is getting greedy looking at rich people. See, if a middle class person is there, Government will not say you cannot minus this. A middle class person will fight right. He will fight for his right. That if I want this much income, I have got so much expense also. I will minus everything. And government has to allow for a middle class or a lower class person. Because they fight for the rights. They will say, if I got this much income, I have got 5-6 expense. So government allows every expense. But dividend is income of a middle class person or rich person. Rich person, they don't, for them, money is not a big deal. So that's why government says, rich people, why are you so much cribbing for deduction? We will not give you deduction. Yes, we respect that rich people, they take risk also by borrowing. Tell me, if I am a super rich person, imagine I am a millionaire, billionaire. So people see that he is a millionaire, billionaire, he is getting so much dividend, but I take risk also. I take big loans from banks. Why? To invest in stocks. So if government can see a rich people is having dividend, government should also respect that rich people is taking so much risk also by borrowing. So your borrowings are respected. See, on one hand, government is putting an eye on rich people by taxing them. But on the other hand, government has to respect that rich people also have their risks. What risk? That to invest crores in stock market, they have taken loan. So respect that loan. Respect that loan means on that borrowing I have to pay interest also. You can see my dividend income. Can't you see? So much of borrowing I have done. On that I have to pay interest. So that government is respecting. But that also up to a limit. Why? Because government doesn't want to give more deduction. Our target is what to take maximum tax from rich people. Okay. See, if this would have been an income of a middleman, government cannot do, people will start revolting. What nonsense. Why bank charges? Why not minus? And a middle class person will fight even for 1,000 rupees. Although my bank charges was just 1,000, I want to minus. See why people fight to minus? Because when you get to minus, your income becomes shorter. Shorter means small. It becomes small. And the answer becomes small, your tax will be small. And you will fight for every small amount. But because these are rich people, they don't bother also. And government is not bothered to listen to them also in case they argue also. Government says you are rich, simply pay the tax. Only one thing you can minus, that is that also if you have done some borrowing from here and there. And on that you have to pay interest, and that also up to a limit. Maximum 20% of a dividend income. Actually this same rule is for mutual fund income also. Huh? See whether it is dividend income or mutual fund income, it's a choice of rich people. In my example you can say dividend, but the rule applies to mutual fund income also. So tell me here also same thing, if it was a mutual fund income and then some expenses were given, you will do the same thing. So rule is same for dividend as well as UTI, mutual fund income. In Ramu, U was there. So whether it is DW Ramu's D or Ramu's U, the rule is same. 4 points. But see, this point was only for dividend and mutual fund income. Like previous point was for winnings. But my first 2 points were general. Huh? In first point I wanted to say in general, taxable incomes, deduct the expense. Any income. Second point was also general. Exempt income, any income. Don't ignore, don't deduct the expense. Because exempt income we put a dash. First 2 points were very general. Third was winnings specific. For winnings, no deduction. Fourth was dividend and mutual fund income specific. Okay. Last point is family pension specific. Last point. For family pension, there is a special rule. Today what did I say? Family pension, if it is received by the wife or family of an army employee after his death, then we have full sympathy. It is exempt under section 10, 19. But that is for army employee, right? Now imagine an employee was not working in army. He was a normal employee. He was doing job in some company. He died. Now family is getting pension. That is not exempt under section 10, 19. That is taxable. But here also government has got some emotion. See, after all, see whether your husband was working in army or a normal job, someone's husband dying and you left alone with your family, it is a sympathetic feeling. So here also government has given a sympathy And what is the sympathy, you know? Family pension, whatever amount you get, one third is tax free. One third. Fixed one third rule. This is not army employee's wife, huh? General employee. Army employee wife, she is having a great advantage. Not to say advantage, poor, she is left alone, but then for her there is no limitation, completely exempt. Even if she gets pension of 5 to 6 lakhs in a year, fully exempt. But for general employees, it is one third. So tell me, if a wife is getting pension of say 3 lakhs, 3 lakhs, so one third of that is how much? 1 lakh. So 1 lakh is, law is not saying exempt here. Law has used the word deduction. See, here government is using the word deduction. Why, you know, considering that if the wife is left alone, although she is getting pension, she has to incur a lot of expenses. Considering her expenses and the burden to manage children, it is considering some expense, government has fixed one third rule. That's why here don't say the word exempt. I will use the word deduction. One third will be deducted. Why the word deduction? Because government is thinking that poor wife has to manage the children. Although she is getting pension of her husband's death, but she has to manage children and so many expenses are there. So considering that burden of the family, they are using the word deduction. But how much? One third. So what was my example? 3 lakhs. So one third means 1 lakh. But here maximum 15,000 only will be deducted. See, government is very miser. They are very miser. You know what? On one hand they are saying, oh, one third will be freed from tax, one third. But next moment government realize one third can become a big amount sometimes. Especially a wife is getting 30 lakhs. 30 lakhs pension. Usually not, doesn't happen. But imagine, just for example's sake, if wife is getting 30 lakhs, so one third will become 10 lakhs. No, that much exemption we cannot give. Maximum 15,000. Means government has got two things in mind. One thing is one third. Other thing is 15,000. And when government has got two things, which thing to follow? Whichever is less. So either one third or 15,000, whichever is less. In other words, you know, government is not ready to give deduction of more than 15,000. So here students argue, why less this much only? So see, instead of cribbing, why only 15,000, be grateful that government is at least having a soft corner for that wife. Otherwise government could have become arrogant also. Your husband has died, it's your husband, what to do? You are getting pension, you pay tax. Government could have behaved rude also, but at least government has shown some soft corner. Now if government is giving 15,000, respect that. And see, government cannot make everything tax free, no? See, I want to help someone, but I should have my capacity. So government's capacity is only 15,000. Like see, there is one poor child. I feel like giving him 20 lakhs to him. But my budget is only 10 rupees. In my pocket only some money, so I will give 10. I feel like helping. Like government also feels that wife should be totally freed from tax. But then government has its budget. They have their limitation. So their limit is maximum 15,000. So instead of crying that why only 15, respect. At least government had some soft corner for that wife. But see, 15,000 or one third, both the amounts you have to check. Huh? Okay, tell me, in the question they give, wife is getting 30,000 pension only. For the whole year, 30,000. So now 30,000, one third you find. Then 10,000 only minus. 15,000 or one third, whichever is lower. Use this formula in 30,000 example. 30,000 one third comes to 10,000. Another amount 15,000. The lower one is 10,000. Okay, now try. Wife is getting 60,000. So 60,000 one third is 20. But compare with 15. Lower will be 15. In short, make a formula either one third or 15,000, whichever is lower. See how I presented. In my example here it is how much? 60,000. So calculate what will be the answer. First I will write 60,000 in the inner column. Then notice what I have written. Deduction under section 57. How I written? One third. See, one third is a fixed rule. Are you by adding or not? One third, one third, one third. Or 15,000, 15,000, 15,000. The lower of the two. So one third is 20,000. 15,000 is a fixed amount, lower of the two, 15. That you minus outer one, 45,000. You know, we call this a standard deduction. Standard means government has standardized the rule across the country. Across the whole country, every such wife who gets pension after the death of husband will get a fixed deduction of one third. And when government standardizes the rule for the whole country, it is called standard deduction. Say standard deduction. You should have the habit of calling this as standard deduction only. Okay. You don't have to write here standard. Even if you write, it's okay. Just write deduction. But in your mind, it should be standard deduction. 5 points are done. Can you see the summary now? Theory is getting over. So there are 5 points you have to remember. Tell me what are the 5 points. Taxable income, deduct all expense. Feel my tone, huh? Taxable income, deduct all expense. Exempt income, ignore all expense. Winnings also ignore all expense. Dividend and mutual fund, deduct only one expense. Interest on loan, that to maximum 20% of the income. Family pension, standard deduction. Look at this. Look here. Read again. Repeat. Taxable income, deduct all expense. I am hammering all because at one place it's all ke only one. In dividend it's only one thing, na? Deduct all expense. Then exempt income, ignore all expense. Winnings, ignore all expense. See, logic also you remember or not? Exempt income we put dash only. Winnings comes from luck. It has not got any connection with expenditure. It is connected with your luck. And we are not minusing luck here. We are minusing expense. And with expense it has got no connection. So ignore all expense. Then dividend and units income, deduct only one expense here, only one. And that is interest on loan. Okay. Then that also maximum 20% of dividend income. Okay. Family pension, standard deduction. 1/3 or 15,000, whichever is lower. Okay. So this is the theory of deduction. Okay. Now see here. See all these notes which you are getting. I have put lot of efforts to make these notes. I will see to that this you will be able to get the access to the notes. See, you might be writing right now. See, but there is my pattern. See, you have to understand me first, then you have to understand the subject. You know what is my style? I explain everything in the lecture conceptually with logic, and I expect my students to remember. And then these notes of iPad, I share with the student, not on the WhatsApp. It is shared through my app. It is shared through my app because I don't want that this note should be circulated publicly. It is meant for you only. And you will be given access to the app, and with that app you can see the notes, and that notes will be there with you till exam. Okay. And anytime while traveling here and there while you're roaming, you can just go through the notes. And deliberately I am making full efforts to write the notes very neatly. Otherwise, if I wanted to just explain, I could have scribbled like this and explained. But then you know, that is temporary thing, no? I want you to retain this with you for a long term till you pass, means May only. So that's why I am writing the notes also very neatly. You will find all my notes. See, like if you see, this is my final CA notes. Okay. All the notes I am writing very neatly. You don't have to see this. I am just showing. Every notes I am writing so neatly so that it can help you. And now what is your work, you know? These notes you have to jot down in your book. And trust me, on exam day, although I will be providing one printed book of mine, that is also notes written in my own language. That is also very simple. But on exam day, you have got so much less time that eventually you will land up reading this only. So that's why, you know, you have the habit of writing these notes in your book. So whatever I have taught, all this you have to write. And you know, my habit is what every lecture I check your book. Whether you written neatly or not. Neatly means neatly. Huh? Like this only. Wherever red pen, red pen. Wherever blue pen, blue pen. Write in the same pattern as I have written. Okay. And write this, I will check, I will make sure you write the notes properly. And this way, by the end of the batch, you know, a good notes will be developed which will be so useful one day before exam. You have to just finish and you will be so much attached with the notes because you have studied through these notes only. And that only if you study regularly, it will be very, literally memorized in your subconscious mind. It will help you on exam day. And every lecture I take up, I will have take up of yours. It's not just that I will come into the class and directly start teaching. In my previous class, whatever I taught you, I will ask you the question. Like in the next lecture, I might ask you, you tell me what is the section of minor child income, you have to answer. If you don't answer, there is no punishment. This is not a school now. We are all grown up. If I am asking the question also, it is for your benefit. If you don't answer, it's okay. I will never shout. I don't know only how to shout. I am super cool. I don't know how to get angry also. Okay. So in case you don't answer, it's okay. It's okay. You don't answer in every class also. I don't mind. But I will not change. I will ask you. You say we will never answer. Don't answer. I will never punish, but I will ask you. But one day, out of shame, you will have to study. Okay, that's why shamelessly I'll be asking every lecture, so that my image should be such in front of your eyes that this sir will come, he will start asking. So even if I don't want to study, I will study. And ultimate object is what along with the class only, subject should get over. Initially, see, you are mature student, but initially if a student is not matured, he might not like it. Why sir is asking, just teach and go. See, in short term you like it, but at the end, if I just finish the syllabus like this only and you don't remember only, what is the use? You will praise me. Sir taught us very nicely, but I don't remember. But that is not a success. My success is what when I am able to teach you nicely and you also remember everything. That is a real success, okay? So in short, I gave you many messages that these notes you will have to write. Every lecture I will ask questions. With no pressure, if you are answering good, otherwise God is watching. God is watching everything if you don't answer, okay? I'll do one thing, we will break the lecture right now. What schedule you are given? So I extended that 12 slot beyond, okay? But we will resume again at 1 o'clock, okay? Post lunch, 1 o'clock, okay? And then and my plan is what is remaining now, theory of gift. But I'll do one thing, after the break, I will take 1 or 2 questions. So that whatever we have done till now, it will become thorough. And then I will take the theory of gift. And once the theory of gift is over, then one more question I will take. After that, all the questions you will have to first try. I will give for homework and then I discuss. My style is what I don't solve every sum in the class. I will just give you idea that you have to solve the sums like this and then you will have to try the sum. And it's not I am escaping from my responsibility. I want that first you try and in the subsequent lecture you will notice I will discuss everything in detail. But I solving with you, you are not getting to learn only. But first you try, then I discuss, you will understand how much you know and where do you do mistakes. Okay. So 2-3 sums we will solve together, rest all sums will come in homework. You didn't get the book now, question book. I'll talk to the team and see how book will be provided to you. Okay. But anyways, right now we'll continue after break. And after break we will need the book. I'll see how to arrange the book. In worst case, if the book has not come also, I have the book with me. You don't have to worry. See here. Questions are there with me. So we can solve with this also. But I'll make sure as soon as possible you will get the book. You will get 2 books. Huh? One is my question book and one is a book kind of this. See. This is my final CA notes. But this kind of notes you will get. These are final CA notes, but similar notes you will get for CA Inter, okay? And these are also very simple notes. So for you, you will have 2-3 sources from my side. My iPad notes, which will be given on app, okay? Concept book, which will be color book, okay? Blue and red color mixed. And one question book, okay? So we'll continue after break. वीडियो को एक बार स्टॉप कर दो.